If we want to separate traders into different buckets, then swing trading, I think, will be one of the largest buckets. If you are holding for less than 1 day, then you are in intraday territory. And if you are holding from 1 day to 2 weeks, then you are in swing trading. And if you are holding over 2 weeks, then you are, I think, in position holding or trend following territory. So from this definition, then almost all my strategies are swing trading, because I trade short-term patterns, and short-term patterns are very good match for swing trading because they don't hold an edge over long term. So now that you know what swing trading is, at least from my perspective, you can check all my strategies on the channel and they will fall into this category, which is holding from 2 to 15 days maximum. Now, one of the best strategies in the past decade was Larry Connor's RSI2, and I featured many versions of this strategy on my channel, which is a swing trading strategy. So I went to my YouTube channel and searched for an earlier video that featured a swing trading strategy based on the RSI. And I found one that basically had a portfolio of 4 swing strategies based on the RSI. The portfolio was constructed using Strategy Quant X. It's extremely simple. Basically, it uses the RSI with a look back of 2 and an RSI with a look back of 4. Now, all of them are going long on the S&P 500, and all of them include a directional filter. That video was posted on September 1st, 2021. Now, since then, I published many more variations of this strategy, and I have been trading many variations of this strategy. So here are the 4 strategies traded on the S&P E-mini futures. So you see strategy 1, the look back of 4, entry when the RSI 4 go below 30, exit when it is above 55, if the price is above the 200-day moving average. Next strategy, again, if the price is above the 200-day moving average and the RSI 4 go below 25, we enter. We exit when the RSI above 75. Then RSI 2 with an entry below 25, exit above 70. Filter is SMA 100. And then the last one, RSI 2, entry below 20, exit above 70. Filter is the SMA 100. 4 simple strategies, no profit target, no stop loss. Now we are going to backtest since 2007, but in the code I put the execution since September 1st, 2021. And this is our beautiful curve. We make about $175,000. And we can see the annual analysis here. So 2021, this is since September, so only 4 months. We made $28,000 in 2021, last 4 months. And then 2022, we made $5,000. 23, we made $43,000. And so far this year, up to the second week of November, we made about $100,000. Very good win percent with very good average trade. If we look at the trade analysis, 123 trades with an average of 75% win rate and an average trade of $1,400 on the S&P E-minis. Now, these strategies are highly correlated. And as you can see, 0.7, this is high correlation. 0.6 is still high. So we cannot get away from this correlation, because they are very close, RSI 2 and RSI 4. And if we break down by strategy, so this is RSI 4 and 4 and RSI 2 and 2. And we see they don't make the same amount of money. The RSI 4 make about $30,000 each, while the RSI 2 make about $60,000 each. So the RSI 2 performance is double the RSI 4 performance. Now, at the time, the portfolio was not selected based on correlation or anything. I just picked 4 strategies. I mean, I watched the video. It seems like I just picked 4 different strategies, put them in a portfolio. But I assumed you didn't know nothing. You just want to put a portfolio of 4 strategies. They are highly correlated. They're all mean reversion on the same instrument. It doesn't matter. But let's dig down a little bit deeper. If we look at the equity run, so we see we have a huge drawdown here. So it's about $80,000. And we find out how it happens here. This is one trade in January 14, 2022. The price went against us by $20,000. We closed at minus 10. And then the second trade, this is another strategy entered on the same day. Again, it has the same drawdown intraday, about $20,000, closed at minus 10,000. And then the third strategy again went on the same day, again had the same drawdown. And the last one, it entered on a previous day and it closed the latest, but again has the almost the same thing. So you see the drawdown from these is about $81,000. So this is intraday, although we closed with a drawdown of about $30,000. Intraday, we had about $81,000 drawdown. That means in order to trade this portfolio, you needed to cover the drawdown, which is about $81,000, and you needed to cover 4 contracts, which is about $30,000. So all in all, it's about $111,000 to trade this portfolio back in September 2021. So far this portfolio made $176,000. So if we plug in those numbers, so let's start with 111,000 to cover the drawdown and the 4 contracts. And we made $176,000. So that means we end up with 286, let's say 500. And total amount we spend is 3 years and 1 month and 15 days. So we calculate. So look at this. This portfolio, even with the huge drawdown and the capital we needed to cover it, it still made 35% on annual basis. So even though we had this huge drawdown in the beginning, we still end up making about 35% per year. And also you could have traded this portfolio using the micro futures, which in that case you needed about $11,000. And of course you could have made about $17,000. The key takeaway is to build robust strategies, combine them in a portfolio, and then trade that portfolio for a while. You cannot quit within 3 months, 6 months. You have to give your portfolio time to breathe and bring those returns. So like I showed you this portfolio, immediately after I published the video, well, not immediately, within 3-4 months, it tanks in a huge drawdown. And because the strategies are correlated, they all have the same drawdown at the same time. Of course, you know by now, if you watch my channel, that you need to build uncorrelated strategies in a portfolio. But even then, this portfolio made most the money back up within 3 months and then went on to make a lot of money, like 30-something, 35 plus compound annual growth rate, which is huge. So forget scalping, focus on swing trading with real robust patterns and trade a portfolio. If you like this video, then you will love the next one.